Hi everybody, welcome back. This is going to be the first video in a new series I'm going to start doing every week where I'm going to cover the trades that I made, specifically options trades. So I made 3 options trades today. I'm going to cover those in more depth than I do in any other video, any weekly breakdown or anything like that. I'm going to go into the rationale of why I chose the strike that I did, the delta that I did, some of the technical analysis that I might have used, some of the fundamental analysis I might have used, where I'm sitting at on the position and all of that. So just going into it a little bit deeper so people can kind of connect with or try to get some tidbits maybe for where I'm at mentally when I'm making these trades. I am no pro. I'm not saying any of this is the way to do it or anything like that, but I just wanted to give people a peek into my thought process and how I'm trading options. So real quick, as I do, going through what the overarching goal of this account is. I am fully living out of the brokerage account. All income that's received is immediately invested into the brokerage account and then split between high yield, dividend growth, and growth stocks and funds. And then I use roughly 50% of the net account value to sell naked puts that if I'm assigned, it's on margin. All income that's generated from this account is used to pay my expenses. Whatever is not able to be covered by my income, I use margin to bridge that gap. Eventually, the income generated from this account will outpace my expenses, and at that point, I won't have to work because the brokerage account will be fully paying my expenses and some. So, to jump right into it here, I'd mentioned I had 3 options trades today. So if you've been following the last couple of weeks, I've been rolling a BITX put position for a few weeks now. And I just wanted to show it here, but I'll jump into the actual spreadsheet here. I was assigned on it this morning. I actually woke up and I was assigned early on it. I was hoping I'd have today to maybe roll it again, but that was not the case. The market dropped substantially first thing in the morning. It dropped a lot yesterday. So my let me jump into the other sheet here. My 48, or I had it at 52 strike put. It got all the way down to like $40 or $41 today. So I was early assigned, so I woke up and had already been assigned on these shares. So I waited a little bit in the morning to sell a call. I think it was around 9 or 10 o'clock my time, Pacific time. I'm here in California, to sell the call in that position. But what I did is I ended up selling a call, and real quick you can see the shares purchased at $5,200. I had to put out for them. And then I sold the call at the 48 strike. And the reason I did that was before I received this premium, you could see my adjusted cost basis from selling all of these puts was down to $49.25 and not $52. So it lowered my net strike cost. So what I'm trying to do right now is just get out of this for kind of a break even. So I sold it for $32.34, which dropped it just below $49. So if I was to get assigned, I would technically lose, not technically, I would lose $92 on this position, but I really don't think it's going to get up to $48. So jumping into real quick here, this is TradingView, which I use for technical analysis and other things, just to track stocks in general too. So on the 5-minute chart, you can see BITX, like most things today, dropped off and was very low. So you can see here, this is where the market opened. There was a big gap down here. You can see 6:30 a.m. dropped and then immediately shot back up, engulfed both of these bars and almost filled the gap, and then filled the gap about 20 minutes later. Now, the way I have this set up is when it's bright red or bright green like this, that means it's high volume. These are volume bars down here. So these were high volume bars. So it shot down and then immediately shot up, and every single bar going up was with volume. So that told me that it was probably heading on its way back up. I sold the call right around this area. So when I saw this, I figured, okay, that's when I should probably go in. I didn't try to time it too perfectly. I just kind of worked out with how my morning was going. And it happened to be the time I jumped in as well. More importantly, though, was my net stock cost, which, like I mentioned, was a little over 49. I sold it at 48. But I think that, so right now my strike is right here at 48. And if I wanted to get out at 52, which was my unadjusted stock base or cost basis. I think it would be tough because it's sitting right here on this 200 SMA. This is the 200 simple moving average, 200-day simple moving average. So you can see 52 is a bit above that. So it might be tough to get there. If the opportunity presents itself, I will, but it's got a lot of gaps to fill here. But right now I'm at the 48. I don't think it's going to get there. If it does, then I may be able to roll back up for $1 and then get out for a break even or a slight profit. So that's kind of the goal on this one right now. The next one was Target, which, if you've been following me, has been a favorite of mine recently. So it was no different today. On Target, I've been selling puts on this one for quite a few weeks now, all the way back here somewhere. But I just really like the price of Target where it's at right now. I mean, sitting at this price, you have to go back all the way to 2020, I think it was. Yeah, so we're right about here. So you have to go all the way back to 2020 before it even touched this. Technically, it just barely touched it here, but it was actually in August of 2019 that it was at this price. So it's over 6 years ago. So I know it's been lower, but that was back in 2018. So I just really like the price of it. It's also come down, and I sold the 86 strike for a week from now. So the reason I like the 86 also is because that's right here at the bottom of this big red candle you can see there. So 86 sits right about there. So it's attempted to come there a couple times. Didn't quite get there here, bounced back up, came down here, barely just almost hit it, and then came back up, and then came down and hit it, but then shot right back up. This is the daily chart, by the way, so each one of these is a day. So the chances, I think, of getting it to 86 and bouncing again, I think is good, plus the price is low relative to the last few years. It's also closed above the 50 SMA here, so it could be trending back up. More importantly, though, earnings are in 1 week. So earnings are on the 19th. Sorry, not 1 week. They are 1 week after this strike. So the reason why I like selling a put on a position that is due to expire like the week before earnings is if I do get in trouble with it, then I can use earnings because the implied volatility rises. I can use the earnings call to stretch the put strike or call strike out and use that to try to get out of the position if I was to get in trouble. I really don't think that's going to happen. Depending on the market, of course, but it did fairly well today, actually, considering how the market was doing. So we'll see how it does. But that was my rationale behind Target, and kind of has been my rationale for a while. I like the price of it, and just used a little bit of technical analysis in there as well. And lastly, I'd go into NVDA, which everybody knows is a popular stock. I sold the 175 strike a week from today. I received $106.34. You can see my ROIs if I was able to do this every week and close them for $1 or let them expire. But going into NVIDIA, you can see today it actually came all the way down past the 50-day moving average, almost hit the 100-day moving average, 200's all the way down here, and then shot right back up. I know the rest of the market did as well, but there is a line of support right here. So it would have to take a lot. It would take a lot for it to drop below this. I chose the 175 because the 175 is all the way down here. If you put a line here, roughly, my strike is right here. So not only would it have to come down and get past all of this support here, it would have to shoot back down past the 50-day average and also the 100-day simple moving average. So I liked it there. The market, you can see it's dropped quite a bit in the last few days, and the market's dropped quite a bit in a few days. So we could be due for a bounce up. And over the course of a week, I like the chances of that. Same thing as Target. This, they report the same day as Target, actually. So I have to next Friday, the 14th, and then the following week is earnings. So if I do get in trouble with this position, again, I can use earnings and the increased implied volatility to try and help get out of this position. But I don't think it's going to get there. And even with all of that said, I still sold pretty conservative deltas. I sold 0.13 and 0.15 and 0.16, so 13, 15, and 16 delta, which is pretty conservative. I try to stick in that 10 to 20 range. Sometimes I'll get aggressive on like a 30 delta if I want to own the position, but I typically will stay in the 10 to 20 range. I'll use some analysis like I just went through, some technical or fundamental analysis that I think is relevant to decide if I want to stick closer to that 20 or the 10 and get a little bit more premium from it. So that's what I did here. That's why I picked the strikes on these positions. I don't want to have these be too long, but I just wanted to quickly run through those. Of course, if you guys have any questions, drop them in the comments. If you guys want to see me cover anything else in regards to these options, you can drop it in the comments as well. Thanks for watching. See you guys on the next one.